joining us to discuss even further this latest news coming out of Genesis, Gemini, and DCG. We've got Lumida CEO and co-founder Ram Ahluwalia. Lumida is an independent investment advisor specializing in digital assets. Ram, thank you so much for joining us. So, your initial reaction to the term sheet, do you think that it's a decent settlement? Things have been ironed out.
Sure. So first off, it's a great summary just a moment before, but we haven't seen the term sheet yet. I've been eagerly waiting for the term sheet to be uploaded to the docket. So it's not there yet. That said, this is good news because there's reporting that two creditor groups agreed to this deal jointly. Those creditor groups can simply choose to accept Genesis's own term sheet that was filed a few weeks ago, which means that the creditor groups see more value in this deal. However, we need more clarity on the source of the value, the customer treatment, how DCG will be valued into the equitization plan, as well as clarity around some of the other terms that have been reported.
So if you can explain a little bit, I don't know if you saw the part about turning some of the debt into equity. What does that do for ultimately for the folks that were that had their deposits over with Genesis? What happens? What does it mean for them ultimately that some of this debt now becomes equity, and what happens then?
Well, so first off, we need to see the treatment of the various creditor classes. There are multiple creditor classes. Not all creditor classes will be treated similarly. You'll have senior creditors that are paid out in cash, for example. My expectation is that institutional creditors will have an equity interest in Genesis after this transaction is complete. And based on some reporting from CNBC, it appears that the nature of that instrument will be a preferred security or a convertible preferred security. So convertible preferred security means the creditor investor is able to accrue interest and then has an option to convert that into equity. So they get the upside should DCG go public one day or be acquired one day, and also get paid to wait in the form of earning interest. But again, we still need to see the term sheet. We need to see what that means for retail investors as well. And there are other terms that we need to clarify. For example, the $100 million kicker that Gemini contemplated, is that linked to a release of liabilities and claims, for instance?
Right. So, but that equity ultimately means that in many ways that it makes it a little more volatile, if you will. The chances of people getting their full money back and finding liquidity and somebody willing to take that equity that's what it hinges on. So they're sort of, they're losing that guarantee of a payback, or at least a promise of a payback, correct?
You have to bet on the value of DCG equity, and of course that's correct. And that means it creates an alignment of interest between these creditors who right now are very litigious and feeling very aggrieved, and naturally so. That's correct. But I would say that the economic pie today is smaller than what's required to make everyone whole, right? So there's a gap no matter what. And this is why Genesis is going through a Chapter 11 process. So this proposal, it looks like at least two creditor groups say that there's more value on the table than the prior proposal.
So I think, you are clearly have been following this in great detail. I think a lot of people who are watching this are very confused by all this. But if we could just step back for a moment and just go through some of the longer term implications, like how this might play out and what it means for the industry. So what's sort of like the best case scenario here, and what's the worst case scenario? Like, just looking at the different ways that this could shake out.
I think on the worst case scenario, I'll start there. I think a lot of the left tail risk has been taken off the table now. It's very constructive that creditors and Gemini and DCG have aligned on a deal. That means the likelihood of litigation between those parties goes down substantially. And that reduces all sorts of other claims and risks as well. It creates clarity. People can get back to business and create more focus. It reduces the likelihood of a sale of Grayscale. It reduces the likelihood of a disorderly liquidation of GBTC, although there may continue to be liquidations of GBTC, and there's some indication that that's happening. So that's on the worst side. On the worst side, DCG will have to continue to pay out interest and drive to make creditors whole. So DCG will, have shackles, but that's not the end of the world. Gemini will have a kicker they have to pay in. There will be some SEC enforcement action that might include some form of customer restitution, but these businesses will continue to stand and operate. On the, I think that's probably the likely path, and the deltas between worst case and best case turn on things like the value of Bitcoin, because the value of Bitcoin drives one for one the revenue generating capacity of Grayscale. It also turns on potential enforcement actions and what that means for the businesses. Are there any constraints that the SEC imposes around DCG or Grayscale or Gemini?
Okay, so if I'm hearing you correctly, the worst case scenario is not that bad. Like, we're not in a terrible place right now. So I guess the other question that a lot of people have is, what does this mean for DCG, right? DCG is such a big player in this industry. Is there a chance that sort of this will all get settled and DCG will sort of resume its previous position, or will they be kind of like affected forever by this? Or, I mean, where do you see DCG landing after this is all over?
Forever is a long time. Like, DCG is going to have a headache for many years to come. We have to see the terms of the deal. We have to look at the equitization. There's this discussion of the 1.1 billion promissory note is equitized. Look, DCG will be paying out cash to creditors for some time to come, number one. Number two, DCG will experience dilution. What's the level of that dilution? Is it significant? Will they be giving up control or in the form of board seats to some of these institutional creditors? We don't know that yet. So yeah, DCG will take its lumps. It's going to have less free cash flow to do investments. It likely will have to continue to cut costs. But DCG, I believe, will continue to operate and continue to get through the other side of this. And the key thing that changed, that was revealed through this bankruptcy process, is that the $1.1 billion promissory note between Genesis and DCG is not callable. And so therefore, DCG doesn't have a noose around its neck. So yeah, look, I think DCG gets to the other side. It will be a continued headache for them. It's going to continue to drain cash flow for them. But there's a viable business on the other side of this.
I guess that's a big point, that over $1 billion promissory note. In the meantime, DCG has started selling holdings in several investment vehicles run by its subsidiary and digital asset manager, Grayscale, at a deep discount, and that's according to Financial Times reporting. They also intend to sell its subsidiary, Genesis, the crypto trading business, as well as its lending arm, which is restructuring through bankruptcy, according to a Genesis attorney. Does that give creditors more confidence in terms of receiving some of their funds back, and but still at a less
sales? Right, the proceeds of those sales will float to DCG, and therefore DCG can then meet its obligations. Now, consider that DCG has a $575 million payment due in May. That's 3 months from now, to Genesis. So that is the reason why DCG is selling assets and cutting expenses to generate cash flow. And it's the fact that DCG can generate that cash flow is good. I mean, look, if DCG can stay as a going concern, which I believe is the case, that's helpful for the crypto sector. We don't need disorderly liquidations. We want to reduce uncertainty. We want to see resolution of customer claims promptly, and that appears to be the case. Now, recall in the Genesis submitted Chapter 11 plan, the timeline was 120 days from initiation and petition of Chapter 11 to distribution of initial payments. So we have to see what that timeline looks here. My guess is it will not be substantially longer than that. Like this has been worked on for several months, and I think investors can expect some liquidity, by May.
Wow. Ram, thank you so much for your insights as always. That was Lumida CEO, Ram Ahluwalia.